Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at SchnellInvestor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. So we've got a special edition today. We're doing a 1 hour Market Buzz, and the reason is I want to communicate some broader ideas to you around the move to electric. And so we've been running some ads to try and tell you about what we're covering off. And what I want to work toward today is how a technician would view this move to electric as it occurs over time. For all those that need to know, StockCharts.com, you can find my articles there under the Canadian Technician or Chart Watchers, and you can always hit subscribe at the bottom. And then gregschnell.com, you can register for electric vehicle theme information on the second tab on the homepage. Any contact information, you can reach me at info@gregschnell.com or any of these social media channels. And now we get into the data that I want to cover off today, and one of the important things that's happening is California said they're going to move to end sales of new gas-powered cars and trucks by 2035. New York State is going to spend $750 million on an EV charging infrastructure, and literally it's government after government after government pushing forward with the electric vehicle movement. They've all felt good about their stock going up if they own Tesla, I guess. Anyway, they're all clamoring to get on this and be the most opportunistic with it. So let's get into the car business, and let's talk specifically about the choices we have as investors and how a technician might view that. This was a chart I presented at the Toronto Money Show on September 19th, I believe it was, last year. And the chart was dated September the 12th. And what I was showing was Tesla was basically jogging sideways for a couple of years. The price had fallen down, but one of the things that was starting to happen was there was a trend in momentum here that had gone on for 2 years. And if this trend was going to start to break to the upside, this would be a pretty meaningful, helpful thing. And there's two things going on here. One is it finally gets above zero and keeps going. Here it just kind of stalled. And over here it was a nice run from, call it, this is after the split, $40 to $77, so almost a double in 6 months. So when Tesla moves, it moves big. Anyway, the important thing was that the stock did start to break out, and we could use these technical clues, even though the stock was way down here and nowhere near the highs, that this was an interesting place. We're starting to see that downtrend in momentum change. I want to talk to you about how to use those charts, and we're going to go through the EV, electric vehicle theme names, all the car companies, and I'll show you the charts. And what I think you'll find at the end of this group of charts is, first of all, there's winners and losers in this electric space already. But the competition is intensifying, and I would say the theme is grand. In other words, lots of opportunity and big and wide, but not all stocks will end up being winners in this big wide theme. And we need to make some decisions. What would be your buy signal? What would be your sell signal? And, the problem is we don't want to end up buying something like BlackBerry that was a great stock and ran all the way up. And then we kept riding it all the way down as the news media said, gee, this looks like a bargain here, and the stock kept dropping. So we need to have some discipline around this theme because it will be filled with hype. And if you can avoid the 50% pullbacks, you could probably make some real life-changing money in here. I want to start by going through the stocks one at a time. And the names that I've picked are in just the alphabetical order or the ticker symbol or whatever. But the concept is the same. We want to look at the chart and see what we see and analyze the information. So here's an example. This company, ARYO, has small electric commercial delivery trucks. And when this stock's been downtrending for a while, and each one of these is a 1-4 something stock split. So 6 shares converted to 1 share or whatever to keep the stock up in price so they wouldn't lose their listing on the NASDAQ. And what happens here is the stock has been basing around $3. Now this is a wild swing down to $1.50 all the way up to $6. But in general, big picture, it's trying to go sideways after declining for many, many years. And one of the other things that's starting to happen here is the momentum is starting to improve. Now here we had a momentum trend that broke, stayed below zero. The stock did get some rally out of this, but quite frankly, we just keep hopping along. What makes it more interesting now is it's up near the zero level, and if they could finally change it and turn it up, that would be key. Now the type of small electric delivery truck they make, I want to say I saw it in Italy, driving down the very narrow streets of Italy, really, really small. And it's not a, it's smaller than an SUV in terms of overall vehicle size, or very close to that. Might have a little more height, but very narrow and short, and low on fuel costs in a gasoline body, but in an electric, perhaps it could drive around town all day. So one of the things we like about this chart is it's starting to at least base. Now, this still has a lot of whippy price action, which isn't really my favorite. And we see the momentum again. I use the PPO for momentum. What does that mean? It's called the percentage price oscillator. And so what we do is we have other types of price or of momentum oscillators. One is the MACD, and Martin Pring's KST, just to name a couple. But the idea behind a momentum oscillator is that you use a long-term and a short-term moving average, and when they start to converge or diverge together, you're seeing some sort of change in trend over a period of time. I like to use weekly charts to figure out the big trend. But what we see on this stock is it's clearly underperforming the S&P 500, and it continues, and over here it's down to zero just because there's no real data showing. Over here on the left, this mountain has made everything else look so small. But as this mountain starts to scroll off to the left-hand side of the screen, we'll start to see this come up. Now, the only thing that really makes this interesting is probably that 300 million share day jumped up on some sort of news and immediately gave it back. And if this stock was to start to do something, perhaps it's going to start breaking out of this base. There's no need for us to rush into it. It's also a relatively small unknown name. So the next chart I want to show is BMW, bearish Moten working. And the big thing here is we've got this downtrend in general for the last couple of years, and recently the highs have moderated almost to a flat line, but still a downward slope. And here they had started to underperform the S&P 500, started a brief rally, and that was pretty good. Then it was underperforming, and now it's trying to break out of this underperformance. And if it could start to step up, that would be a pretty good clue that perhaps something was changing. So here we have an electric car company, obviously one of the better world manufacturers of cars. And we're starting to see the momentum indicator reach new 2-year highs. So there is some change in interest here. And now we just want to see if it can actually break back through this prior high, so or trend line. So what we saw in Tesla was we had a downsloping trend line, and we had a downsloping trend line on momentum. Here I don't get the downsloping trend on momentum. So what I'd like to see is this come back to zero, and then kind of create an upsloping line that we could kind of work off of. We'll see if that happens or if it just takes off to the moon. But usually when it gets up to, I'll call it major highs, usually it needs a little time to pull back and rest. And that can be a nice opportunity, and especially when it stays close to this resistance line, if it can start to break above that. What that means is anybody who bought the stock in the last couple of years is now in a profitable position and more likely to hold the stock than sell it because they've got a winner. So here's BYD, and this is a Chinese manufacturer of electric cars, electric bikes, buses. They make solar panels and batteries. This is a pretty integrated company, very, very big. And you can see here it was underperforming the S&P 500, and roughly at the beginning of the year started to outperform. It wasn't really taking off yet, but all of a sudden right in here, it really started to break through, so call it 6-month highs in relative strength, and started to accelerate up even faster than the S&P 500. Approximately the same time it broke out to new 1-year highs, and we see the momentum down in the bottom starting to improve and go above zero after living below it for almost 1.5 years. So this is the kind of thing we're looking for, and you know, this stock's only $14. It could run for many, many years. But there's lots of volume interest starting to show up. This is traded on the over-the-counter market with the 5-digit ticker symbol. So when you're looking at these stocks, what we want to see is a volume bump. We want to start to see a breakout above resistance. We want to see momentum turning positive and really starting to accelerate. At that point, it's hard to know if the stock is really going to take off. I think one of the big things here is they are heavily invested in the alternative energy space. And when I say alternative energy, that's compared to liquid energy like gasoline or diesel. But this particular stock is really shaped up nicely and looks like it wants to go a lot higher. So I've marked it down as one of the nicest charts in the whole thing that we're going to look at. And the reason is because it's still trending higher. And albeit it's hard to buy it after it's gone from 11 to 14, it's now consolidating. But it looks like it has lots of momentum and it's a nice place on the chart. Mercedes, what we see here is they had a big downtrend in price action going for 2 years, and it started to break out to the top side. Really, really nice. And now what we're looking for is to get to new 52-week highs here on the stock. And if that can start to happen, that's probably going to attract more buyers. Anytime you're hitting new 52-week highs, people who have bought it in the last year are all happy. There's just less selling pressure. So what we see here is we've got a downtrend on relative strength. It's started to make an uptrend. It's broken that downtrend, much like we've seen on a couple of those other charts. And now what we want to see is obviously new one-year highs would be very pushy, and that would be like we saw on the BYD chart. In terms of momentum, it's at the highest level in 3 years, so something's definitely changing on the stock. And as all these companies start to come out with electric vehicles, it might be the electric vehicles that are changing it, or just the tone against the car company. Perhaps they've got different models that are starting to appeal to people. But I think in a lot of cases here, these companies are all coming out with electric cars in the showroom, especially these names. A lot of these names, they're able to compete easily with Tesla on luxury and refinement. So there's a lot of big benefits there. They also have distribution networks that are much more vast than Tesla. So if they can sell the car all over the world, they might actually do better than Tesla, even if the Tesla car was nicer, as an example, just because of the network. So there's multiple reasons for these former automotive greats. It's not that they're not still good companies. It's just that their stock's been beaten down for multiple years. And can they start to break this trend? So whatever you think about their car or a different company's car, what's really important when you're investing, part of it is to like the product. But the second part of it is what do other investors think? And I'm going to show you some good examples where other investors took some electric car ideas and just literally sold the stock off. And in Tesla's case, they liked the offering and bought the stock up. So there's a whole bunch of different approaches here in the business. And I liken it back to the 1920s when all of these car companies were coming out and were trying to change the world. And, things as little as the rear view mirror that got put into a Ford by Henry Ford, and he hung it from the top of the car. How that was found is quite an interesting thing, but it doesn't take much to all of a sudden change how people view the car and the simplicity. So it could be inside LED lighting, it could be outside LED lighting, it could be, once we get past just being an electric car, what are the other primps and features that people like that all of a sudden they attach to? Currently, Tesla, as being one of the early leaders in the space, clearly has an advantage, but these other car companies aren't going to let them just take that over by themselves. So the next company I've got here is a company called DSG Global, and what they do is they make low-speed electric vehicles, things like golf carts and that kind of thing, and the stock's terrible. It's at 15 cents or whatever. I've put it in here because look at the volume that's starting to show up here now. It's at a 15-cent stock, so the volume soars to 200 million shares a week. Who cares at that price point? But the idea is when you start to see volume come into a stock, you might start to see some change in behavior. And as this EV technology changes, we're going to be watching for people to all of a sudden start to pick up different interest groups within this. And here we see a PPO that slopes down here, and it's starting to turn up and give us a buy signal. Now this stock is 15 cents and still very choppy, and it's not something I'm looking for. But we'll keep it on our list, and if all of a sudden they actually do start to make one-year highs and have a new product or something that changes the investor opinion on the stock, then we'll be in a place to recognize that as it starts to break out. If we just throw the chart off our list, we won't be aware of those changes. So the next one is Ford, and Ford's come out with the electric Mustang now, and I think it's 2021, they plan on rolling out the electric Ford pickup. It might be 2022. But you've got lots of reasons to kind of keep looking back at these big manufacturers and saying, what are they doing to compete? And there's a lot of competition out there for wheels. One of the things is Ford's actually left the car business and they're only doing SUVs. And now they've taken the name Mustang off the car and put it on their new electric SUV. I think it's those kinds of big momentous changes that are going on in the car business that are worth watching. And here what we see is we have a downtrend line in momentum going for roughly a year. If all of a sudden this is going to start breaking out as the price, or as this, so this is relative strength compared to the S&P 500, and this is just the momentum on the stock, and obviously it's heading up, but over the last 10 weeks it's just gone sideways, so it's starting to lose its upside momentum. If it can kind of get spurred on and turned up here, that would probably kick that Mustang into gear. And so we watch to see how the investors are reacting to all of these things the big companies are doing, and are they getting something that's going to have enough curb appeal to draw in new buyers. And the investors that are putting money to work in the space are quickly trying to tell us which places they like. Now we can also see on this stock at 750, there's big horizontal resistance. If Ford can get back through that level, that's pretty bullish. And the reason we want to talk about that is everybody who bought above that line is underwater and they're not happy. So every time price gets kind of close, they're more encouraged to just sell either at a small loss or a smaller loss. Or all of the people who bought down in here are thinking the stock's really good and they'd actually like to own more. So we get to this point where we call support and resistance, where it has trouble going higher because we get the selling pressure from these other groups, and yet all the people down here are supportive of the price moving up. So when this trend changes, we want to be aware of that. So a couple of things need to happen on Ford. Obviously, we've had lots of volume. We need to see momentum, even if it just rests here and then starts to turn higher, that would be bullish. This big downtrend line, it really comes down to how well their new electric offerings are going to be perceived by the institutional investor. At this point, I don't think there's any reason to own the stock. We'd let somebody else own it. In my opinion, it would at least have to break through this 750 resistance layer. And as it goes on its way to break through this downtrend, kind of like that Daimler-Chrysler chart, or the Daimler chart did, the Mercedes chart, as that starts to break out, that would be very bullish. Next, we have Fiat-Chrysler, and of course they also have the Jeep line. This has the same idea as Ford with that downtrend line, but it's sitting right at the downtrend line, whereas Ford is still back from it. And the one thing that's going on here, I have a downslope on the relative strength compared to the S&P 500. And maybe for people who are new to technicals, what does that mean? Each day the S&P 500 might go up a percentage point. Well, if Ford went up more than 1%, it would be outperforming on that particular day. So in this case, it's a weekly chart. So it says, what did the S&P 500 do? And last week, the S&P 500 was up, or was down 0.5%, but Ford was down 3 or 4%. So this kind of hooks down a little bit. And if this week Ford starts to outperform, it starts to turn up. And over time, it starts to build a trend of either outperforming or underperforming the average. And for big institutional investors, they want to outperform the average. So they're constantly looking for things that are trending up, not down. And that's why it makes it hard for them to attract investment until they can actually start to outperform to the upside. And it's the big institutions that are going to move the market, albeit in Tesla and Apple. We've probably seen more retail millennial investors than we have in a while. But the important thing to keep in mind here is the trend in momentum here has changed. And now the real question is, can the stock also start to break through this price resistance? And if it does, that's a very bullish sign and would probably encourage more people to get on board. So let's say they come out with a new Jeep electric vehicle. Jeep's their top selling SUV. All of a sudden you have something that people really like, and now it's available in electric. Is that enough to spur interest in the stock for the investor? So we want to be aware of those trend changes. Next is Geely, and it's the leading Chinese auto manufacturer, one of the leading Chinese auto manufacturers. But we see this support and resistance line. It's at $2.30 or whatever. But we see it sitting here where the stock was holding above it, then it fell below it, and now it continues to get stalled at this level. Here it's rolling over again, and we don't really have a lot of upside pressure in momentum. Now, if this just comes down near zero and starts to turn back up again, that's an interesting place on the stock. You can see recently the stock was way down here, and it gapped all the way up, had a huge gap up, and is now just kind of consolidating, and we call that a flag pattern, where it kind of breaks out, flags down to the right, and then we'd expect it to start moving higher again. So something caused this big jump, and now the real question is, can it pull back and start to turn up? We don't really need to know the news on here. I always find when I start to let the news cloud it, some of the news shows up really quickly, but I'm about to show you a chart. Came out with great product technology 2 or 3 years ago. And as they rolled out the technology, what did the investors do with the stock? And I'll show that to you in just a second. So here's GM, and GM has that same support and resistance level. It's above both its moving averages, which is quite bullish. What we want to see, obviously, is it get back through this resistance. So if you've invested in GM for a long time, you might have been getting a dividend, but other than that, it's been struggles. The stock just stuck sideways. COVID came along, it fell down. Now it's trying to get back up into that same sort of channel area it was at a higher level. And we see the momentum trend like that Fiat-Chrysler chart breaking through, but now we still need to see, can it start to turn higher? And it's right around that zero level where we've seen it just keep rolling over before. So here's Green Power, and this is a Canadian ticker symbol, but they make, the company's out of California, and they make minibuses, school buses, and double-decker buses. The important thing about this is a name you probably have never heard of, and yet here's a stock that had a downtrend in price, started to break out on big volume. That's nice. It also started to make new 52-week highs and started to push up, or one-year highs. And what we see is the relative strength line was downtrending and started to turn up dramatically. And as it's done that now, it was outperforming. But here the stock got up to $30 in a parabolic move from $3. So it was $3, and then roughly 15 weeks later, it's at $30. So that tenfold move, that's what Tesla just did in a year. This little unknown name just did that in 10 weeks. Now we're pulling back, and we're about halfway down, right? $30 to $14. What we want to watch for is this stock about ready to start turning back up again? And if it is, that's pretty bullish. What we want to watch for is as this comes down, we'll let it base or start to make a low again. And then you'd want to look to try and add rather than adding while it's still falling. At the bottom, we see momentum rolling over and starting to fade. So as it comes down here, what we'd want to make sure of is that it doesn't drop back below zero. So we don't want this to be a one-hit wonder and then fall all the way apart. We'd like to see it come back down. It's going to break this trend line in momentum, come down and maybe make a higher low. So this is my first low. Make a higher low over here. Then we draw a trend line under that, and we want to kind of gently see that momentum increase over time. So this is a really nice niche business. We can see the volume, well, it doesn't sound like very much, got up to 4 million shares, and clearly that outperforms anything it's had going on for the last couple of years. So there's some good news in here And as this company, I think what happened was this ticker symbol was a different company, and they bought in this Green Power Motor Company, and it started to rock the stock, and off we went. Now, with all the hype over, it's pulling back a little bit, and we'll wait to see if it can finally make that corner and turn back higher. So here's Honda. That's a trend I think we can all figure out. The stock is going from top left to bottom right. We don't really like that. The relative strength continues to underperform the S&P 500, so it makes it very hard to justify putting new money to work there when you could just go buy the index and do better. And then the second component down here is the PPO, and what we see is you've got this long downsloping trend line for a couple of years, and now what we'd want to see is this stock finally breaks this downtrend in momentum and starts to turn higher. And you can see in here that the stock was wandering sideways. I'd draw a trend line across here, and it looks so easy in hindsight, but all of a sudden the stock breaks out. Now what we're wondering is how high would it go? Well, it just ran up and then rolled back over. Here it's rolling over right at zero. This really isn't a good combination, but the whole space is now just kind of relaxing a little bit. So if it's going to start taking off to the upside, that would be bullish. Here's Harley Davidson, and they've recently announced they're going to come out with electric motorcycles. And of course, we're all familiar with the sound of the Harley. And the real question is, how do you do that on an electric bike? And then does it still have the romantic charm that Harley had? They had roughly a movie every 5 years that motivated people to kind of go out and get the feeling for the open road. And clearly you can see on this PPO momentum indicator, the stock rarely gets above zero, continues to just roll over, roll over, roll over. It's doing it again. And until there's some big trend change, there's no real reason to own the stock. We do see a support and resistance line here where the stock is starting to test, and then it falls apart. And what we want to watch for now is, can it turn back up and start to break out? And the way we would look for that is it starting to move above its moving averages? Is the momentum indicator at least starting to turn up above its signal line? Is it starting to turn up above zero? And how do you keep track of all that? Well, we use scans to try and find tools like that. So we have this big mountain of volume that showed up during COVID. All of a sudden everybody got scared and the stock really started to swing wildly. $5 weeks almost every week. And now it's starting to break back down again. And again, we got up against that resistance line, and it was on the GM chart and it's on the Ford chart. You know, we're seeing these resistance lines show up all over. They're very common. And now what we want to watch for is that these stocks in general have to start breaking through that upside as they start to come to compete in the electric car market with Tesla. So here's a company called Lucid Motors. And Lucid Motors had a special purchase acquisition company, special purpose acquisition company, and they bought into this Lucid car company. The car company is actually 95. Their cars start at 95,000 to 170,000. The stock is at 60 cents. So this is, you know, a substantial price premium, and the stock isn't exactly priced on that basis. So on the news that they were doing this takeover or whatever, the stock shoots up from 50 cents to 650, and you get to hold it for 2 weeks, and now it's given it all back up. So here's a company that made a 20-fold move in a few weeks, and probably all the insiders were selling up here at the top and all the retail investors were buying, and now it's come all the way back down to nothing. And until they actually can get some upward momentum, you'd want to watch. We'd want to see this trend line in momentum start to build and hold and work higher. And until that happens, I think it's worth being lucid on Lucid. Just relax on that one. So here's Li Auto, LI, and this is a Chinese electric vehicle company that just went public here in July. That's why there's no data on the left-hand side of the chart. And as it's gone, it started, let's call it $11, went to 24, and soared up there, and it now pulled back. And we can see the majority of volume is taking place in around the $16 area. So that's kind of where the market's finding value with it. It doesn't have a momentum indicator yet because there's no price history to calculate one from. But on the relative strength up here, again, it takes it just week by week and says, are you outperforming or underperforming? And it's just starting to build its pattern out. So it's not uncommon for IPOs to be extremely wobbly, and then they find shareholders who want to own them, and they'll build a base, and then the stock will either work up from there or start to fail. In the case of Uber, it's kind of continued down for a while, and now as the stock goes into more solid hands, perhaps that can turn. Well, here we have Li Auto. And we're in the early days of this stock, a big company, but what we want to watch for is how does price react. And if it started to make higher highs, like above this $19, then it's starting to get more interesting. Looking at NIO, this is a Chinese SUV company, and obviously the SUVs have been the big sellers for the automakers. So this is one stock that's really doing well, and you can see that same downtrend that we saw in Tesla, and a big breakout on high volume. And then when it started to bump up, now the momentum indicator kicked in and off it went. Well, it's rolling over, so it's losing a little bit of its enthusiasm, but the stock is still pointed up and to the right. Even if it started to fade back to this black line, it still wouldn't be that big a deal. It's not uncommon for stocks to go on a run, pull back, and then kind of keep going. But to me, I think they're in the right space, and obviously investors are starting to like what they've got. The move from $4 to $20 is a 5x move in just a few months. So pretty nice, and it's outperforming the S&P 500, obviously. So everything on this chart looks good. Here's NIU, NIU, and they make full-size scooters, so more like the Vespa, not like the little green scooter you rent on the side of the road. And this chart really took off, and now it's flagging. That's what we call this when it just kind of goes sideways after making a flagpole. It just kind of trends sideways briefly, and then it takes a while to accumulate, and then we want to watch to see if it can turn back up again. Until it does that, we want to just let it kind of build consolidation and find new buyers, institutional buyers that are willing to hold it. So here's Nikola, and you probably heard the news, but this was a previously held stock. Then they said they were merging Nikola into it, and all of a sudden the stock went from $10 to $100 or $94 and started to pull back just after making a flagpole right really high, kind of an abundance of enthusiasm. We call these parabolic moves just that. As they soar up, they usually come back and kind of test their base or their breakout level. But recently we had news of the president or the key founder of the company leaving, and so that's put a lot of pressure on the stock, and we'll see where it bases out here, and can it actually get back to where it could build an uptrend without the key driver, the founder of the company there. Nissan, this is the company I want to talk specifically about, where they came out with a new technology, and yet investors haven't really adopted it as a good idea, and in fact sold off the stock instead. So back in 2018, Nissan came out with a program where this electric car could basically pick up power at the office. If you drove it home, you could connect it into the home, and it could power up the house. And then if the house didn't need any extra power, it could push it to the grid, and it could be very flexible, moving power around. And, you know, really doesn't seem like a concept I understand why they need that. But the big question here was, what would investors think? And actually, they voted with their wallet. The stock started to move below the 200-day or the 40-week moving average in lime green here, and has stayed below it for a full 2 years now. There's nothing investors like about this. Now, the one thing that has started to show up is this downtrend in momentum has started to break. So perhaps with all of the news around electric vehicles, perhaps the Leaf can start to get some momentum in maybe some of their other vehicles, and it could start to make a wave higher. At least we have a change in momentum showing up here as the stock tries to base around this $7 level. But quite frankly, it was breaking down in early January, February, even before the COVID kind of hit across the US stock market. But this breakdown, as it consolidates, if it can finally start to move above the 200-day or 40-week moving average, perhaps that's a trend change. But again, everything on this chart points south, and there's no reason to rush into the stock. Let's let somebody else make the base. Ferrari. This is a really interesting chart, and what we see here is a trend bottom left to top right, exactly opposite the trend we had here, top left to bottom right. And what we see on the Ferrari is everything's been moving up nicely, and recently prices kind of consolidated tightly, ran up against this upsloping trend line, and is now starting to break back down again. And the only thing that makes me wonder a little bit about the stock is we had a momentum reading way up high here, and a lower high here, and a lower high here. So on each one of these rallies, investors are less enthusiastic about Ferrari, and they've come out with a hybrid for now, and they're hoping to have a fully electric Ferrari by 2025. Well, the real problem is the race is starting now, so they're 5 years behind, and perhaps investors will actually sell this stock off because they're not really ready for the intense competition. One other clue we have is if we draw a trend line under here, we're just starting to break down below the upsloping trend line in relative strength. Now, that's not everything, but if you just took an upsloping trend line here and started to break it, the stock basically wandered sideways for 6 months after breaking that trend line. Same thing here, you broke a trend line and it wobbled for a while. But now we have it where we've kind of got this 2-year trend and it's starting to crack here. So this is an important place to watch, and just because it's Ferrari, don't get too attached. When momentum starts to break on these stocks, like we saw in some of the previous examples, once investors lose interest, these can roll down. Now, maybe it just goes down here and starts to turn back up again, but it's definitely worth watching because each one of these rises is lower. Each one of these momentum runs are lower in momentum. How's that? Electrameccanica is a company that makes a little electric one-passenger car. Think the width of a motorcycle or slightly wider, but it's all closed in for bad weather, rain, wind, snow, whatever. And it's a 3-tire deal. But the important thing about the stock here is it's really spiky, right? It's had these huge euphoric runs and then falls and then euphoric runs. What I like about the stock shape now is this is the first time since it IPO'd, which is back here on the left, in initial public offering. It broke through the zero line, ran up, and is now pulled back. And if it was to start to turn back up again here, this would be a very tasty place to look at it. These cars are out on the streets. Somebody sent me a picture from Vancouver of the cars actually in circulation. And you know, for commuting to work and whatever, they're really small. They're as convenient as a motorcycle. They're maneuverable, easy to park, not very intensive on fuel. And in this case with electric, it can get a lot more mileage with a lot smaller vehicle. So the stock is pulling back. And if it could kind of break through, let's call it this $2 level or $3 level, as it breaks through here, you're kind of building a base, and this is kind of your initial warning that something's changing. It pulls back, and then it tries to slowly start the grind back up. So we've broken this big major downtrend. We've got our initial thrust, a pullback, and now's an interesting place to watch the stock to just see if it can start to turn back up again. And the car is called the Solo, by the way, if you wanted to Google that. SPI Energy, this is a SPAC, Special Purpose Acquisition Company, and they came in and announced they were going to build an electric vehicle and new charging technology for charging stations. Well, guess what? The stock was in a big downtrend, and it's literally a $1 stock, and it goes bing to $46 in 1 week and pulls all the way back to 10. And guess what? This is mostly retail investors getting caught in this. The computers are just running it up and the retailers are buying it, and then it falls away. And this stock will probably come all the way back into his zone. But I called it like moths to a light bulb. All of a sudden it's like, oh wow, new 52-week highs. It must be something great. And I mean, they just announced they're going to build a car. We see this in the gold business, in the mining business, in lots of places where they come out with this sudden announcement of greatness in a very big declining stock, and then all of a sudden something new happens and it starts to change. So will they actually get a car built, and can they compete on the charging technology and everything? I think that's a long shot. At least let's let somebody else build the base and not use our capital to do that. So here's Toyota, and one thing we're finding on Toyota is they actually have the hybrid technology for a long time in the Prius, and now they've moved on to an electric fuel cell, an electric slash fuel cell hydrogen powered car that only emits water. And it's pretty fantastic technology, and they're just trying to get it going. But what I like, remember how that horizontal resistance line was showing on a lot of charts, support and resistance? Well, here we have it for Toyota, and we're starting to break out to the top side already. I will say we have declining momentum, and then COVID came along and it rallied, and it hasn't been able to kind of push up here. But this hybrid car between hydrogen and electric is already on the market since 2019. They're getting their feet wet with it, and if they have the success that they had with the Prius moving people into that, this could be quite an outstanding move. So this is a pretty interesting place on the chart. Again, we see the downtrend in relative strength compared to the S&P. We want to see that start to turn up. But this chart is breaking through this horizontal resistance, which is good. Hasn't taken out prior highs, which is kind of the next step. But we want to see it also get through this big downtrending momentum line as the competition gets fiercer. What we don't want to see is this build a left shoulder ahead and then what we call a right shoulder, where basically it's making a lower high on the right-hand side and come all the way back down and test this 110 level. We would call that a head and shoulders structure. It's not really, don't worry so much about the shape of the pattern. Really what it's saying is we're making a lower high on the right-hand side, and it's roughly equivalent to the high on the left-hand side. So we just see that kind of shape show up in the stock market, and typically it's a thing to be worried about. I like the shape of the chart right now. I just want to see this momentum trend up and at least stay up here positive for a long period of time. Tesla, this company you might have heard of. Anyway, big sideways trend on relative strength, and of course this is all flattened out because of the big excess move we've had over here on the right. And we can see that even compared to the S&P 500 in terms of relative strength, this has gone parabolic. And I've used an exponential scale, so this is the percent change each week is logarithmic, and so it shows a doubling. So 50 to 100 is the same distance apart as 100 to 200, and then 200 to 400. So when you make this logarithmic scale, it's based on percentage. But what we see from Tesla is a fantastic move up, obviously, from this $50 level all the way to 500, and now rolling over at the top. The one concern I have here is this uptrend in momentum, and again, it's already run tenfold. So if it paused for a year, would anybody be too shocked? Because it's quite frankly been quite euphoric. But what it's telling me is the uptrend in momentum is getting very close to breaking, and so it's at least worth being aware of the fact that it's having trouble, not having trouble, but it's starting to lose its upside momentum and might just need to migrate sideways like it did for a few years here. So it's always worth watching the momentum indicator just to see, and again, here it was running up very fast, it started to pull back. This was meaningful. It was $190 all the way down to 70. Then it went all the way to 500, and now it's down to 400. So it's quite quick on the moves, 425 currently. But you just see the momentum indicator can help you realize when things are starting to slow down, and currently that's what it's telling me. That doesn't mean it's going to zero. It just might mean it migrates sideways. But we're also seeing an intensity in the number of stocks competing for market share in the car business, and we might find that that's the pressure that gets put on Tesla, is the sheer numbers. So here's Volkswagen, and again, an over-the-counter stock, but with a 5-digit ticker symbol. And what we see here is this support and resistance line is still there. We've got a downtrend in price, and we need, I could draw lines all over these things, but I'm trying to keep them relatively clean. First of all, we need to get through this resistance level and then try and take out this high and at least get to new 52-week highs. The momentum trend is right at the line here. So this would be similar into the case that we saw in Tesla when it broke out a year ago, where it was just coming up against that momentum trend, finally broke out to the upside, and just as it did, the stock broke through resistance as well, and off it went. Now we still have, I'll call it a downtrend, a big picture downtrend in relative strength, but for the most part, last 6 months, the stock has been performing in line with the S&P 500. It needs to start outperforming to attract more investment. Workhorse, they make UPS-style delivery vans or FedEx delivery vans, and the point is this is another niche market that's really well suited to the electric vehicle, and the reason is because it's going to go back to the same building every night and plug in. Probably not going to make a big bunch of highway trips. That's usually the highway tractor trailers. And we've already seen companies like Walmart start to expand their interest in Tesla's highway trucks. So I think they just signed an order for another 130. So we're seeing, these unique situations or new to industry technology starting to come out. And one of the areas picking it up is the commercial space. Now on Workhorse here, you can see the stock was horizontal around $4 here for 2 years, and then all of a sudden goes from 4 to 30. Really nice move. Now, have we missed it? Well, what we see is the price has made a higher high, momentum is making a lower high, so it's usually a time to be cautious, but just let this pull back a little bit. The euphoria kind of come out of it a bit. Maybe it comes back to $14 and you get a chance to buy it a little bit lower. I realize the euphoria is still there. I think the big thing to recognize is recently there's just been so much euphoria. You'll probably see a pullback, and that pullback would be a nice place to try and enter on. And so one of the things we'd look for when we scan is things that are starting to turn up, right? Our momentum indicators are starting to improve. The stocks are starting to move back above moving averages. Volume is starting to improve. Relative strength is starting to improve. All those kinds of things can help point us to the strong stocks in the space. So here's a company called WorkSport, and I've put it in because they have announced that they want to get into the pickup truck market, but it's a 40-cent stock, 20 cents today, and the average price in here is around 10 or 20 cents. But the big thing that they do that is different, they're actually making a solar power panel, the cover for your pickup truck boxes. That whole thing is a solar power panel, and it can plug into your electric motor to power the vehicle moving down the road, or if you're in the construction business, you can use that power plant to power tools and all that kind of thing. So a relatively unique interpretation of it. I've put it in here because they said they were going to start doing electric vehicles, but I think that might be a long shot just based on all the competition out there, but it probably made the stock run up a little bit. I'm more interested in all of these accessories that are starting to use the technology of an electric motor and then start to figure out how to get power over there. And, maybe on a highway tractor trailer, it's a 53-foot trailer and the whole roof is a solar panel. And while it's driving down the road, that's enough to push the motor forward as well. So there's lots of technology out there that we could start to see coming into play. This one is called XPeng, and the company came out at the Chinese Auto Show this week with an actual flying car, and they IPO'd very recently at $15, and it ran all the way up to $25. That sudden burst gets everybody's attention, obviously, and gets carried quite widely on the news networks, and then all of a sudden you see the stock rattle back. But we saw the same thing on Li Automotive, LI, where it pulls back and then it starts to build the base. And if you're looking at a stock, that's very typical from an IPO. It'll run up, then pull back. Shake Shack, I think, went to 100, came all the way back. Facebook took off like a rocket, came down to 20 bucks or something, and then made a long road up from there. So there's lots of examples of IPOs, and the big thing to watch for here is just let the stock settle sideways, get some stable ownership of the stock, not just retail traders trying to flip it. And as it starts to make higher highs and work its way out of a base, that's kind of when you want to start to look more towards that. Okay. So I want to summarize up some of the things we've talked about so far, and then I'm going to talk about why I think there's other opportunities in this space, not just in the car side. And so under the electric vehicle theme, just summarizing what we saw on the charts, other charts are starting to shape up like Tesla, and we see NIO, we see the Workhorse company starting to turn higher. those little niche markets are really starting to be interesting and starting to push the stock charts in positive directions, where the investors are obviously thrilled with the results. Out of the mainstream car companies, they haven't really started to break out yet. I would say Tesla or Toyota probably had the strongest right side of the chart. But what we want to watch for is, can they as a group start to fire up? And if that happens, do we start to see Tesla level off from competition? So by looking, not going through all the financials and the sales of every car and all that, let's look and see what the investors are doing with their cash towards the automobiles, and are they starting to diversify into other names in this space, and how are they holding their positions. And clearly, we see stocks like Honda and Nissan that continue to be very good cars, but quite frankly, they just don't have the attraction or the charisma that is creating that stock to start to run. And we really need to see that in order to change. But in general, what did we see? We saw that a lot of the charts had a resistance line right above them, and they all need to kind of get through that. As these electric cars come out into the dealerships, that'll be a big thing to watch. And as that starts to separate, I think just looking at the charts, we'll get a lot of clues from that. I think there are even bigger opportunities, though, in other parts of the electric vehicle market, and I want to talk about that now. So we have different ways that we can look at it. We can say, oh, well, this is going to be 20% or 20% or whatever. We don't really know how it's all going to work out, but we know that there's a lot of things that have to happen with the electric vehicle market. The glass technology in the windshield changes quite a bit based on the heads-up display and based on the type of cameras they put inside the rearview mirrors to look through there, whole different shaping and shading on that. There's a lot of technology in glass, in lighting, interior lighting in cars. That's a big one. It's one of the biggest aesthetic changes. There's a new, what did I see? The new Halcyon car. I think that was the name. I forgot. I just looked at so many different pages, but they had lights in the rims on the wheels, and the car looked pretty cool. So we see lots of different changes that when we bump up the size of the electric component in the car, interior lighting, exterior lighting, under car lighting, automotive, autonomous driving, all of those different factors are starting to come at us at breathtaking speed, and there will be companies left behind, but there will also be big opportunities in other space. And I've got a couple of charts to show you that are completely different than electric, and yet they're doing quite a bit. The charts look really, really good. So if we were to just pick some different spaces, first of all, one of those spaces is going to be, where are we getting all the components? So where are we getting the rare earth metals to make the batteries? And where are we getting the copper? An electric car uses 6 times more copper. And there's a great write-up. A gentleman out of Texas wrote up, I think his website was 92 or C92 or something. And he wrote up that, just gasoline only, not even diesel fuel, just replacing the gasoline components in America, the gasoline cars, and moving those to electric would require a grid expansion of 27%. Well, California's had brownouts in the last month here, just on electric demand. So if you're going to take a car market from 2% to 100% and crank that up, you're going to need huge amounts of new power supply. So we need copper for the transmission lines. We need upgraded copper in the home. We need more copper in the cars. We need copper mines. We need the ability to move that copper from the mine to smelt it, then from the smelting, get it over and get it made into wire, get that wire out into the transmission markets. Lots of things have to happen in the background to make this rock. So you've got raw materials, you've got electricity companies, you've got steel companies building the transmission lines, and the computers going into the cars, all the different changes in autonomous driving technology. Lots of that is around wiring. So we're going to continue to see all these different spaces. So I've just put them at 20. We have no idea what the percentage change is, but I have a picture of copper, and basically copper supply is to peak out relatively soon in 2022. That's only 15 months away. And here we have copper peaking out in supply just as all of a sudden this whole network of electric cars is opening, and we need these massive expansions in the grid. And if we think massive expansion in America's grid, we also have that same problem when we roll it out into China and India and Canada, Latin American countries. All of these themes are global, and the big push here on raw materials for some of these other companies is really important. Now, we also have some secondary ideas about different types of fueling systems. And when we get into that, we have to talk about how are we going to figure out where the winners are in this whole space, and how do we keep track of it? So that's what I want to spend just a few minutes here. I think there's bigger opportunities in other parts. There's lots of different industries groups, niche areas that are just as interesting, and you'll probably find the stock soars, but much like we saw that Honda and Nissan chart, we don't want to get trapped in the wrong area. They have EV, but not where investors are liking the stock. We want to focus on stocks that are going up for us if we're going to trade in this space. So some are going to trade on hype, and Tesla does a good job of kind of keeping the momentum going. Other these spike up on parabolic moves. We want to focus mostly on the big picture, big companies with lots of changes where the investor's really getting solidly interested. Growth and profitability, it's going to be very difficult in the early years to try and get profitability in this growing segment. And so we're going to use technicals to continue to point to the big moves. And I just want to show you, here's a company called Ballard Power. When I was a younger investor back in 2000, this stock was up around $100. It spent 20 years going sideways. And recently in 2019, it finally broke a trend line just like Tesla did. Started to go on a nice long run, and the stock has been running for 2 years, and it's just recently broke its upsloping trend line. So perhaps it needs to come back down to $13 here or something, and just pause a little bit before it is able to rejuvenate itself, and perhaps it comes down to the zero line in momentum and starts to turn back up. But this chart went from 3 to 20. That's a pretty nice return. Again, you're completely separate from Tesla. You're in hydrogen fuel cells, but they're in drones, and they're starting to make buses, and lots of good things going on. This one, Plug Power, is also involved in the fuel cell side. And the chart's obviously doing very, very well. Again, $2 to $15 this year, so pretty big move. And you just see momentum starting to wane here, so perhaps we wait. But we have to figure out a way to kind of keep watching all of that. So if any of this was of interest to you, and if you want to do it yourself, feel free to do that. What we've done is we've set up just a little EV annual membership, and we've got a lot of stocks that you might be interested in. But if you'd like more help, we could send you a weekly email for less than a cost of a cup of coffee each week. And what that does is just send you an email of stocks that are starting to look good. This is just an example. This is a copper miner. It's breaking out to new 52-week highs, starting to take off, momentum starting to improve. You've probably never heard of it, but a really nice company just starting to percolate up. Stock's only 80 cents. And if copper does what we think we need it to do over the next few years, this could be a big gainer as an example. So how are you going to find those? We're starting to track over 150 companies, and I'm pretty sure that list is going to grow exponentially in the very near future to try and find those companies breaking out into these patterns. And again, feel free to do it yourself. If you'd like a little help, we'd be happy to help you for a cup of coffee a week. And that's also going to introduce you to some of the other work we do, and you'll get some emails just kind of directing you down that road. To follow through, you're going to get a chart list like this, and says these are all the interesting charts this week, and then we'd kind of point out a few of the good ones we like. And again, it requires a dedicated strategy of finding good stocks through lists, scans, and solid setups each week. We run scan codes like this to try and find the stocks we're looking for. This is just made up scan code, but again, we try to find some significant opportunities for you. So again, if this almost free market info can help you, head over to gregschnell.com and scroll down to the homepage. Look for this image, click, and go. Again, it's $2 a week or $97 for the subscription for 1 year. And lastly, when you get this email, it's not an advice to buy or sell. It's just stocks that look good to us, and you might want to consider them and think about them for your own portfolio. And again, thank you for watching, because it's always nice to have somebody step in and listen to the work we've put forward. Hopefully, if you've got some ideas, feel free to send an email to info@gregschnell.com. And thank you for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern. Thanks, everybody. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.